Reinsurance companies operating in Latin America continue to benefit from the region's GDP growth, although the impact of Hurricane Otis in 2023 highlights the need for additional capacity. That, according to a new Best Market Segment report. We're joined today by AM Best Director Eli Sanchez and financial analyst Ricardo Rodriguez Perez. And Eli, how have reinsurers reacted in the aftermath of Hurricane Otis?
Hi, John. Well, they reacted quite well. Of course, we have a mix of primary insurance companies writing differently. We have those who have strong ERM capabilities that were able to provide sufficient information to reinsurers, and reinsurers that have good ERM capabilities that were able to provide us with their exposures and their potential losses or their financial situation after Otis happened. Now, in that sense, most of our rated reinsurers were able to absorb any losses that came from that. However, the magnitude of the event and the speediness as how it happened really opened the eyes of the exposures that are in the region and how climate change is potentially affecting hydro events. So they reacted well. They had the capacities in place to act accordingly, but we also have to pinpoint that this hurricane can be a little bit muted by the construction in place in Acapulco and overall in Mexico. There were no structures that were damaged. There were glasses and content and windshields, but really nothing structural. So if we can escalate an event of this class to another region that doesn't have that infrastructure, it could be really devastating. So I think that was something that muted the effects of such a significant storm.
So, Eli, how do you expect renewals to play out for the remainder of this year?
Well, I think we have seen some effects already. Renewals are getting tighter. If you have a good experience and you can provide that, reinsurers have shown their willingness to adjust prices not that high up. We have seen renewals going up to 35% increases. We also have programs that have gone 5% increases. In comparison to the previous years, when we saw a little bit more of risk-adverse reinsurers, we are not seeing panels changing that much, just maybe some particular players. But as in the past, there are some regional reinsurers that have been able to fill those capacities or those layers in the reinsurance programs. So it's just the dynamics going on. Now, with that said, the market seems a little bit less hard than what it was. So I think renewals are going to go according to the experience of every insurer or reinsurer if they are looking for retro. But what we have really to be aware is that we're in a natural catastrophe prone area, and we all in the region depend on where it hits and the infrastructure it's available. So I think we have to look very closely to the risk modeling and the capabilities to provide information accurately from insurers to reinsurers and reinsurers to retro partners.
What can companies do to improve their capacity levels?
Well, I think they have to be able to better select the risks, then to keep having a good track record with their insurance companies. And then there's really not much that they can do. There's been some alternatives, really, like we have seen companies trying to find out how parametric reinsurance would look like in their books, or how they could go and make some co-insurance within other insurance companies. And that can really open a little bit more of capacity, not traditional capacity. But besides that, they really depend on the reinsurer's point of view of the market and the experience that they have in each business line that they are covering. So that takes us to the next question. Like, we have potential interest rates cut in the future. So really the returns on reinsurance markets are going to be more attractive to investors. So they might be more willing to start placing more capacities and profit from the returns that the insurance capacity has to provide, rather than rely on a high interest rate environment that potentially is going to no longer exist in the medium term.
Ricardo, AM Best has had a negative outlook on Brazil's reinsurance market. How has it evolved, and are there any positives that you can point to?
Sure. Brazil's reinsurance market has started recovering, but despite an atmosphere of economic uncertainty, as you mentioned, the GDP growth was again strong in 2023. High prices, average performance of the Brazilian real, and elevated interest rates continue to support the reinsurance industry growth. We can say that the Brazilian reinsurance market has learned from previous experiences such as the COVID-19 and the droughts that affected the agribusiness to diversify more its risk and improving their risk selection. Important players in the industry have opted to retain less risk and even exiting business lines and territories where they don't have enough expertise or are more exposed to cat or climate events. Some positive points that I could mention are the strengthening of the reinsurance market in a global perspective, which has allowed domestic companies to improve their pricing levels and decrease its profit dependency on high underwriting volumes. The second point would be the high investment income achieved in the recent years, which compares to previous levels in 2017. This is mostly driven by the high interest rate environment that the country faces. And the third would be the initiatives for the reinsurance and retrocession market, such as the insurance linked securities, by creating more efficient provision of reinsurance capital from institutional investors.
Has there been any impact from the Rio Grande floods, Ricardo, and how has that affected companies?
Well, it is important to mention that these floods that took place in Rio Grande do Sul was an event that didn't happen since 1941, and it wasn't an event such a magnitude as this one. The region suffered big losses from this event, but not the insurance market. It is estimated that less than 7% of these losses were insured. So as of now, the companies have shared with us that despite the severity of the flood, it didn't impact its operating performance considerably. The positive side that could be rescued from this is that the insurance culture will be reinforced in the country, as better offerings of products will be available that include coverage to this type of events, benefiting the market obviously and the policyholders.
Eli, are there any other trends in the regional markets that you can highlight?
Yeah, I think when we speak about the awareness of the events that have happened, and when some with some muted effects, some with larger effects, but overall prices in reinsurance have gone up. So I think we have seen a lot of primary insurance just really trying to get better terms and better conditions, and this has led them to, besides of trying to do co-insurance, trying to go to treaty programs instead of going to facultative programs that can be much more expensive, and also starting to when they want to reach out to other businesses, they have started to reach out to underwriting delegated authorities. So they have been using that to find more attractive business in some other parts, participating in small layers. But we have also seen interest from other participants in around the world where they want to enter Latin America using MGA. So that's an emerging trend. Also, I think risk modeling has been something that has been improving in the region. I think in these last 10 years, we have seen risk models much more interested in developing the region, but also insurers, especially well-rated insurers, have invested heavily on systems and technology that allows them to better specify their exposures, creating much more precise PML analysis. So those are the really key trends to highlight. Now, if we just go and look at the risk transfer industry, thinking about cat bonds, we've seen some activity in the region. This is mostly concentrated in risk transfer going to the markets through governments and issuance of these bonds. They have performed well, they have paid well, and this could be an interesting alternative for players in the region if they want to expand capacities and to liberate that from their balance sheet. Just put on a bond and explore those opportunities. But I think those are the main ones that we can highlight.
Thank you, Eli. Ricardo.
Thank you so much.
Thank you.
That was AM Best Director Eli Sanchez and financial analyst Ricardo Rodriguez Perez. You can find the full report online at ambest.com. For AM Best TV, I'm John Weber.